Hello traders, Cousin Vinny coming to you from theclosingprint.com on July the 14th, 2019. In this edition of your weekend video newsletter, we'll discuss the areas in the markets where strength has been showing up. Looking for IWM to push a bit higher this week. It is a laggard. And we saw the Nikkei, the Hang Seng, and the Bombay Stock Exchange all close lower last week. Most of the big cap tech names moved higher with the exception of Netflix and Apple. We saw big moves in Tesla, Intel, Nvidia, and Amazon, along with Facebook. The bond stock ratio is short-term bullish, long-term neutral. HYG and junk are neutral, slightly higher, but did dip a little bit last week. The Dow Composite is bullish. It broke out last week, plus 1%. And the S&P 1500 remains on a buy signal, trending. Most of the signals are bullish, with fear indicators all moving lower. Gold is continuing to consolidate in a range for the last couple of weeks after some nice gains. As the US dollar moves lower, the copper is at a double bottom and trying to push higher. The standout last week was West Texas and Brent crude, both moving above their 20-period moving averages. That's bullish for crude and for equities if that continues. The heat map is neutral to bullish. The international markets are looking better. We'll look at some IBD 50 names that are showing relative strength. Many of them broke higher last week or are trending or happen to be pushing off the 20-day moving average. SPY Weekly followed through last week. RSI remains above 50 and rising with volume equal to the previous week, and MACD is above its signal line and rising. The bulls are in control. As the spiders rise for the past 4 days, we broke out to all-time highs, of course. Junk bonds are flat to slightly bullish, so we're a little bit neutral there. We'll keep an eye on junk bonds this week. New York Stock Exchange advanced to climb is rising at new highs. In addition, I might mention that all of our breadth indicators are bullish and rising. And the expected move for the week is $3.26 plus or minus, so that gives us a target of 302.92 upside and 297.38 on the downside. So we'd have to pull back into this range right in here, previous breakout level. The NASDAQ 100 outperformed last week, so we'll look for follow through in that index. We'd be looking for big cap tech names to continue to move higher as bank earnings start this week, and we have Microsoft on deck. We'll look for a similar follow-through if strength persists in those names. RSI continues to rise, volume looks good, and MACD is above its signal line and rising. With respect to small caps, we're still looking for a breakout. We did take some calls late Friday, looking for a follow-through. We got buyers to step up intraday, pushing the close back into the upper half of the daily range. RSI is above 50. Volume was red on Friday because we didn't get back above the opening level. MACD is above its signal line, however, so we're looking for that momentum to carry us forward in IWM and for those calls to profit this week, with an expected move on the upside of 158.28 or 153.94 on the downside. Expected move for the week is $2.17. We can also add into the S&P 500 the mid-cap 400 and the small-cap 600 stocks. The green line is that cumulative average. As it rises and stays green, we're on a bullish signal as more stocks participate in the current rally. We also have the histogram, which is a confirmation signal, while the S&P 1500 broke out last week. You will also note that indexes like the Dow Jones Industrials, only 30 stocks, remember, but it's breaking out above volume by price. There's no overhead supply at these levels. More importantly, during this sideways price action, the rate of change slowed dramatically, so the Kopach oscillator moved lower. But note that this is starting to hook now. We're well off of the extremes and have potential for this to turn higher and start rising for several weeks before hitting an extreme level once again. Wilshire 5000, similar idea here is once we started moving sideways, we came back to the moving average, which is bullish. Price action resumed its uptrend. RSI is rising. All the while, the Kopach cycle managed to taper off a little bit and now is starting to cycle up as we begin this move into an area of no overhead supply. 5,000 stocks, a broad measure of market participation. And if we look at the weekly time frame, same idea. RSI is rising in the upper panel as we break out to all-time highs. Note Kopach cycle. This gave us a good warning signal back here in April, late April, when it started to turn at extremes. So we were able to take profits into strength when that was happening. Members were alerted to this fact. The dip was bought, and the cycle now on the weekly time frame is starting to strengthen our position on the daily. Also keep an eye on skew, which is showing that institutions aren't hedging, though we are starting to pick up a little bit as volatility remains low. This weekend we also wrote an article about sectors which are performing, which are weak. You can see all four of these: communications, financials, technology, and consumer discretionary are all bullish above their rising 20-day, and the 20 and the 50-day crosses are bullish, showing this cycle is continuing higher. So if you're focused on new positions, look at these sectors. All depends on what happens with Citigroup, of course. It reports on Monday before the open, and JP Morgan reports on Tuesday before the open. I have a position in JP Morgan that will take off before the close on Monday. Focus on these four. These are looking pretty good. In addition, we want to see transports moving higher, and also we saw industrials take off last week. Weakness, we saw a little bit in biotechs as well as real estate, utilities, and healthcare. Staples continues to push higher. There's a lot of stocks in that group that also looks good. So overall, sectors look pretty good going into the first week of bank earnings. In addition, international markets are all above their 20-day moving average with a few exceptions. Keep an eye on these as well. There's areas where you can invest your money outside of the U.S. that are very bullish, pulling back to the 20-day or rising above the 20-day in a bullish cycle. So just keep that in mind as we start the third week of the new quarter, bank earnings, and the third week of the second half. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on July the 14th, 2019 with your weekend video newsletter. I hope this helps. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, get outside and enjoy the day. It's beautiful out here in Northwest New Jersey. Take care, and I'll talk to you soon.